Let's talk markets here on Real Ag Radio. We're joined right now by Jody Lawrence, based out of Nashville, Tennessee. His company is Strategic Trading Advisors. Hey, Jody, how we doing?
I'm good, Sean. How you doing so far? And gosh, now that we're more than almost halfway through the year, and June is 18th, and U.S. pollination's coming up, this year couldn't go by any faster.
Oh, you know what? I was having a glass of wine with my mom last night, and she said, "Hey, next week the days start getting shorter." I'm like, oh my, what? How is that possible? Anyway,
Yeah, I guess what summer starts Friday. So yeah,
yeah.
we're 2 days away from. See, I think it should go the other way. If summer starts, the days should continue to get longer.
I'm right there with you. Like, I don't want to have to think about. We're just getting into the warmer part of the year. I don't want to have to start dealing with shorter days. Man, we're just kind of getting going here. Okay, Jody, let's get into the markets here. Um, okay, if I was to ask a farmer walks in to your office today, they're in Nashville, and they said, Jody, what's going on in these markets? What are you telling them?
Well, I think the first thing I have to tell them is I always tend to tell them, okay, here's the bad news. We'll finish with the good news. And what we think has happened, because if you just look at the July, December corn spread, the industry really expected with, a fairly tight ending stocks number for corn, that you would have a nice premium to sell old crop of July over December. And we did up until, oh gosh, but maybe a month, 6 weeks ago. And now July is an inverse to December. And the hard part about that is what that probably means, and what the cash market's telling us is there's more corn out there from last year's crop,
Mm,
from the 24 crop, that potentially the USDA and WASDE, that they underestimated what was out there, because the cash markets would not be acting like this if the true carry out was down in the 1.4s like they told us it was. And then when you move on to, that's the bad news for corn, is we've kind of kicked the market while it was down, because with the potential of 96 million acres plus, we have exceptional crop ratings. This time of year, we have no weather issues, and only spotty and small regional weather issues in the U.S. Corn Belt as far as moisture concerns, that we're heading into pollination in as good a position as the U.S. crop has been in years and maybe decades. And with that, last year, I always point to is kind of the double-edged sword of agriculture, because production agriculture is extremely, uh, you know, cannibalistic. And what I mean by that is there are no farmers or anyone in the business listening to your show who go, well, this year I just want to have an average crop. I don't want to do anything special. I don't want to try anything new. I don't care if my brother-in-law beats me. This is just average year for me. Everybody goes out, they make changes. Everybody in the industry, you look at the new technology on all the equipment that comes out. You look at the new genetics. You just gave the plug for the seed form that's going to come up. They're going to be talking about new genetics, new traits, things like this. And you add all this together, even after last year's weather was, nowhere near as good to this point as the 25 weather has been. And we still had even though they cut it, it's probably closer to 179, 180, a record crop. And that always opens the potential with this. If we have no issues, all the way through Labor Day, the U.S. could produce a 183, 184 national yield on 96 million acres.
that's a lot of
And
corn.
that's a lot of corn, 16 billion bushels. And it's an enormous accomplishment. And it's something everybody should be congratulated for, that's in the industry, for moving everything forward. But at some point with the rising costs of land and just the rising cost inside the industry, the higher cover charge just to get in to plant an acre of corn or beans or wheat, canola, oats, anything that the margins are shrinking by the day. And then you run into the problem. Okay, well, I've got to produce more to make everything, make all my ends meet. And what happens, you just end up with more bushels that drives the price down further.
But we're
Uh,
we're not out of the weather. Like I've been hearing a few weather forecasts concerned about now that we're moving into some, the pollination period, concerned about how hot some of this summer could be and maybe some of the dryness in a state like Iowa. So we're not out of the woods yet, are we?
Oh no, no, it certainly because we've seen some flash droughts start into July and August that begin to take. First of all, they trim more bean yield than they do corn, but they take the high top end yield out of corn. So we're not out of it by a long shot. But if you look at the drought index and you look at subsoil moisture, we have a much broader safety net this year to put up with that kind of stress than we have in years past. But yeah, it's never over till it's in the bin. I completely agree. But my concern is always there was a lot of farmer optimism in all the meetings. You and I have talked about this that we both attended and that we spoke at individually that, oh, look at, you have all these weather models that are projecting hot, dry, and we're overdue for not a 2012 catastrophe type drought, but, something along the lines that certainly we go back below trend on yield. But to this point, all those models have missed it because they didn't see all the rain that we've gotten. And we're counting on somebody predicting the future in February to try
Yeah.
to be optimistic and build a marketing plan around, and we all know better than that. Unfortunately, we do hold out hope that because we know how quickly these markets can move. If we get 7 days of no rain and 96-degree weather, right in the middle of pollination for some of the biggest producing states.
Okay, so it feels like that's a lot of the bad news.
Right.
What's the good news?
Well, the good news is the
Trade
EPA
exports or what?
ruling. Uh, I'm sorry, what'd you say?
Well, I was gonna say trade and exports, but you mentioned
Yeah,
the EPA last week on the RVOs.
yeah. The EPA and the RVOs, you really have to look at this because we spoke. A lot of what I talked about in 2024 was the optimism for sustainable aviation fuel, the expansion of the biofuel, especially on the soy diesel part of it, that it could start to fill the domestic and, the North American oil market, whether it's canola, whether it's bean oil, whatever it is, that you could start to see more and more internal demand, domestic demand towards that, just like we saw 20 years ago with ethanol for corn. And it just they missed several opportunities. They were allowing all of the imports of the used cooking oil that they didn't shut down that loophole. But now it appears shockingly that Secretary Zelnick, who was against all of the biofuel,
Yeah.
and has been his entire career, all of a sudden, the industry came in and gave him uh, kind of a best case scenario of, gosh, this would really be helpful if you gave us these big numbers. And nobody thought they'd ever do it, but they came awfully close by proving it. Now, there's some other things, the small refinery exemptions, the SREs, and obviously it's not done yet because that just the way Washington works, everybody knows that nothing happens quickly. But that really could be something. And if you look at beans, especially where we have kind of bounced back to. You think about how big South America's crop was, and more acres and more yield and everything great out of Argentina and Brazil. The beans still have a 10 in front of them is shocking to me. Even though the U.S. acreage was down a little bit, this is the kind of thing that domestically, while the price of beans may dip below $10, if the basis stays great, you're getting a net that you're still getting a good price for them. So I'm excited about the EPA and the RVOs because it's so early in this administration. This isn't kind of a walkout thing that a new administration or a new election could just end immediately with an executive order. So I'm optimistic about that because domestic demand is all anybody ever asked for.
Yeah, absolutely. Hey, Jody, I'm going to ask you about wheat, but first let's stop over the livestock. Hogs and cattle, quite the run.
Yeah, cattle are coming off just it's 3 4 years, and I guess it really started back during COVID because the herd management, and everybody thought COVID would kill the beef market because all the restaurants were shut down because nobody was going out. But what happened? Everybody realized they could get a better cut of meat from their local butcher or their grocery store, go home and cook it, and be half price of what they were paying for a lesser cut of meat. And the gosh, you look at the red meat protein market, especially in cattle and beef, it has been on fire for since late COVID. So let's just call it 21, and new all-time highs in feeder cattle, live cattle, and futures and live cattle cash trade earlier this month. And just like any market that gets there becomes some gravity that you get these big pullbacks like yesterday. But certainly the health of that industry with the lowest number on feed, and it depending on how you look at the numbers in 10 to 20 years in the United States. And you got a good economy. Uh, Obviously, you've got issues in the Middle East that may cool off some people's outlook for the world economy, but the cattle and hog market certainly looks strong. And the only thing, the cattle market takes so much longer to get a turn to add feeders and then put more box beef out, but the hog market probably is heading towards a restock situation where you're going to have more feeder uh, coming out within the next 6 to 8 months. So anybody that is raising hogs or doing contract hog business, there are going to be some great hedging opportunities coming up.
Yeah, well, and on top of that, we started off talking about corn, and if we've got 96 million acres of corn, we're going to be plus 180 on the yield. There may be some feed around that the livestock feeders, the price they may like the price that they're going to be feeding those animals out for. Not good for
Yeah,
corn,
and that
but good for
Yeah,
livestock.
and you kind of have double-edged sword here because you look at soy meal when bean oil took off on the EPA RVO announcement, the bean meal market crashed. So if you have high margins in the livestock business and you have falling feed costs, that's a great dynamic for some herd expansion. So
Yeah. Hey, before we
be
wrap up here quickly, I wanted to hit on wheat. Wheat's having a positive day. What's going on in the trade here today on wheat?
Well, I think you have a couple things. You had the funds in a record net short position heading into harvest. And the trouble in the Middle East, I think the wheat market is starting to realize that if the U.S. gets involved and it does escalate to a point where any of the other Arab neighbors, the major exporters or the major importers, and you look at Russia and Ukraine, their problem certainly isn't solved. That the wheat market had absolutely zero risk premium in it, and every major fund on the same side of the boat. And today, between all the contracts, they're up 15 to 22 cents. I think today is really just a money movement. Uh, day because you've got July 1st notice day next week. So you got people rolling to September or Dec. But you also, there is some concern in that market. You're up at levels right now. Everybody should, profits certainly should be a lot better heading into the winter wheat harvest, which typically over the next 6 weeks, the seasonal's pretty bearish. And the crop ratings for the U.S. are good. So U.S. yields so far uh, have been at expectations, if not a little better. It's one of those things. If you have wheat, uh, a great mentor of mine told me a long time ago, said if you get a big rally in wheat, unless you have a shocking event like Russia invading Ukraine or just a catastrophic weather event somewhere, that it's grown on every continent except Antarctica, and it gets replenished twice as fast as corn or beans. So that's what you always have to take about where you get your opportunities to hedge your wheat. The U.S. soft, over 30 cents in the last two sessions, and I realized the why and that it could go higher. It always can go higher. I would love for this to be the lowest sale of the year, but we're still, even with this big rally, anywhere between 60 and 80 cents below the earlier year highs and the late 24 highs. So
Yeah.
uh, we know, and wheat is in a good position right now. So it's definitely a hedging opportunity, and that's what I'm recommending to my customers.
Yeah. Well, if we can close above 650 on that September spring wheat, that's gonna, I think, be looked upon as a bit of a positive. Hey, Jody, thanks a lot for joining us here today. I do appreciate it.
Absolutely, Sean. Always good to talk to you and wish everybody well as summer starts on Friday.
For the latest ag news, agronomic advice, and more, check out realagriculture.com and Real Ag Radio.